The information provided in this video is for informational purposes only and reflects the personal opinions of its creator. It should not be considered legal, financial, or investment advice. If you're considering starting a venture capital fund or engaging in fundraising activities, you should seek professional legal assistance to ensure compliance with the laws and regulations of your country. Raising a venture capital fund is not just about presenting numbers and projections, it is about telling a story. LPs don't simply invest in spreadsheets or market trends. They invest in people, conviction, and a well-crafted vision of the future. When a venture fund walks into a pitch meeting with potential investors, it is not just offering an opportunity, it is asking for trust. A great LP pitch is not an information dump. It is a narrative that answers a few fundamental questions. Why does this fund exist? Why now? And why is this team the right one to execute this vision? Without compelling answers to these questions, even the most well-researched fund strategy will struggle to win commitments. At the heart of the pitch is the investment thesis, the driving force behind why this fund was created in the first place. It is not enough to say the fund invests in early-stage tech companies or high-growth startups. That is too broad, too generic. LPs hear dozens of pitches from funds claiming to be focused on disruption or backing the best founders. The real question is, what makes this fund unique? For some, it is a focus on an emerging sector before the market catches up. A VC fund may see a shift in AI adoption before the rest of the industry, positioning itself at the forefront of a once-in-a-generation transformation. For others, it is geographic specialization, knowing an overlooked market better than anyone else. Some funds are defined by access, a founder-led network that provides exclusive deal flow that traditional firms can't replicate. Whatever the angle, the thesis must not only be clear but urgent. LPs need to feel that this moment, right now, is the time to deploy capital into this opportunity. That waiting would mean missing out. But a strong thesis alone is not enough. The team behind the fund is just as critical. In venture capital, experience and credibility matter, but so does the ability to convince LPs that this is a team that knows how to win competitive deals and help startups succeed. If the fund's partners come from a strong track record in venture investing, their past successes will do much of the talking. But for emerging managers, those launching a fund for the first time, credibility must come from something else. Deep domain expertise, founder relationships, or a perspective that established firms lack. An ex-founder turned VC, for example, may argue that their operational experience allows them to spot and support great founders better than traditional investors. A team with deep technical backgrounds may position themselves as the VC firm that truly understands AI beyond the buzzwords. It is not about proving that the team is smarter than everyone else. It is about demonstrating that their unique backgrounds give them a clear advantage in sourcing, evaluating, and supporting the right startups. Once LPs believe in the thesis and the team, the conversation shifts to something more concrete: how the fund will generate returns. Venture capital is a long-term, high-risk asset class, and LPs need to understand exactly how this fund is designed to succeed. This means explaining how capital will be deployed, what size checks will be written, how many companies will be backed, how reserves will be allocated for follow-on investments. A fund targeting pre-seed startups will have a very different return profile than a growth stage fund, and LPs want to know how the numbers add up. Most importantly, they want to see a clear path to exits, because at the end of the day, LPs invest to make money. A fund that cannot articulate when and how it expects liquidity will have a hard time convincing sophisticated investors to commit capital. This does not mean overpromising or pretending that every startup will become a unicorn. It means demonstrating a deep understanding of how venture returns work, that a few breakout successes will drive the majority of returns, that strategic M&A is often a more likely exit path than IPOs, and that secondaries may provide early liquidity in later-stage companies. Yet, even with a strong thesis, a great team, and a clear financial strategy, LPs need one final thing: a reason to commit now. Raising a fund is not just about persuading LPs that the opportunity is good, it is about creating a sense of urgency. The best fundraisers understand that momentum attracts momentum. LPs are more likely to commit when they feel that others are already committed, when they sense that the fund is filling up quickly and that waiting too long could mean missing out. This is why many VCs strategically time their fundraising announcements, why they signal that large institutional investors are already on board, and why they set hard deadlines for commitments. It is not about pressuring investors, it is about creating the confidence that this is a fund they need to be part of. In the end, an LP pitch is more than a presentation, it is an invitation. An invitation to believe in a vision, to back a team, and to participate in something bigger than just financial returns. The most successful fundraisers are those who do not just sell a fund, but who make LPs feel that they are part of a movemento, any that is shaping the future, one investment at a time. Raising a VC fund is about more than just numbers. It's about telling a compelling story that makes LPs believe in the vision, the team, and the fund's ability to generate strong returns. A well-defined investment thesis differentiates the fund and creates urgency, while a credible team reassures LPs that they can execute successfully. Beyond that, LPs need confidence in how capital will be deployed and how liquidity will be achieved. Successful fundraisers build momentum by signaling strong early commitments, making LPs feel they are part of an exclusive, high-potential opportunity shaping the future.